Hi, everyone, and welcome to Conversations with Curio, where we get curious about different financial topics and how they impact our lives. I'm Stefan Revelo. I'm joined here with my colleague Liz Gillette, founder and senior advisor. And today we're going to be talking about a little different topic than we typically do, and that's going to be climbing the corporate ladder. So we're going to be talking about career changing, how to look at your career, and how that fits in with the scope of financial planning as a whole. So, Liz, how are you doing today?
Hello from Maryland. You want to tell our audience where you are today?
Yes. Our few listeners out there, I am out here in Argentina. So I'm in Buenos Aires. I got here about 3 days ago, and I'll be here for 3 weeks. So I'm in a completely different area right now. I'm overseeing a nice little view right now. So it's pretty awesome over here.
Oh, rub it in. Well, thank you for taking the time away from your busy schedule to make this podcast happen. Yeah, I'm excited to get through this topic of, different transitions that happen in the workplace and the types of things that we like to guide clients on and bring in some expertise on these
Yeah,
topics.
And yeah, so I mentioned this is a little different because when people think of a financial advisor, they're thinking about their investments, they're thinking about retirement, they're thinking about just their personal investment accounts. But they don't really see us as playing a role, or people that don't work with an advisor don't see them playing a role in within their career. So this can be what is needed when you want to make a career change. This can include salary negotiations. It could include what's the structure of your compensation. So I figured that we can kind of start there on what is structure, the pay structure for certain clients, how that looks. We have the privilege of working with a wide range of clients. So we have business owners, we have W-2 employees, we have independent contractors, and they are all compensated in various different ways. So, for example, the most common, but people would know, would just be your standard W-2 salary. So this is just your base amount somebody makes, and that's a clear check they get every 2 weeks or twice a month, however they get paid. And it's a very easy and predictable amount that you know what to expect by the end of the year, by the end of the month. But on top of that, especially if you work at a lot of these Fortune 500, Fortune 100 companies, like a lot of our clients do, they'll get a lot of added kind of benefits and bonuses on top of that. So one is a bonus. So these can be based off personal performance. This can be based off the performance of the company. So it's not necessarily that you don't have a lot of dictation over that. It's just if the company did well and they have profits, they'll share it with their team. So I think that's a rather common one people understand. In company stock, this is always a super interesting kind of great benefit, but a lot of people, since it's not in the form of cash, they sometimes see it as maybe less beneficial, or they see it as, what is this? I'm getting paid in this, all this. And sometimes it could be 50% of somebody's payment, some payment structure and compensation package. So it takes out a large chunk, and people think, I don't know what to do. I get my base salary. I understand that. I get the money, it hits my checking account. I contribute to my 401k. That's pretty straightforward. Then they're getting sometimes tens of thousands, hundreds of thousands of dollars in employer stock or employer stock option, and they don't know what to do with it. So Liz, kind of setting that stage, what are some things that you kind of think about when you see somebody with a lot of company stock, or kind of how we kind of walk through clients when they come with that situation?
Mhm. The pattern we typically see is at the beginning of your career. Sounds like the beginning of what you were talking about, right? Like you're a salaried employee, maybe you have an annual bonus or a quarterly bonus, but you have this predictable stream of income of cash that's coming in. And then as someone progresses in their career, we often see this additional compensation be added. One of the examples is with Amazon. They have their structure set up that way. So right away for the first 1, 2, maybe 3 years, you're having the bulk of your money come in as that traditional salary and cash. And then as you climb the ladder and you work your way up, less and less money is coming in cash and more is coming in the form of company stock. And one of the challenges here is you will see what your total compensation is for that time period, and you'll be trying to live off of that total amount of your compensation. But if only about half of it is coming in the form of hitting your checking account, then we often have clients saying, what am I doing wrong? I'm making all this money. Is it going to taxes? What kind of bad decisions am I making? And that's particularly where the RSUs can make a difference, because when restricted stock units come in, the year that they land is the year that it counts as income for that person, or in our case, that client. So whether or not they're selling out of it and maybe cashing out of it and using it as money to live off of, or cashing it out and investing it further, you're getting hit with the taxes for that year. So our job is to be able to help clients understand their overall savings rate and to say, all right, how much extra discretionary dollars do you have? And then we can figure out the best vehicle. So it may be a 401k, it may be by keeping that company stock in place, holding it for a certain period, but always keeping an eye out for your concentration risk. Because even the very best of companies, you don't want to have all of your eggs in one basket. So we're traditionally looking at that and coming up with a structured timeline of when they can hold on to some of that company stock, when they can sell it, and most importantly, getting a really clear vision of how much of your money are you saving on an ongoing basis versus how much is going right toward your living expenses.
Yeah, no, thank you for that. You kind of brought up 2 points that it is such a consistent theme that we see with our clients. The first one was kind of that tax piece you hit on. So like you mentioned, when an RSU, when restricted stock units, when you receive them, they are taxed as regular income. And so I'm going to throw some numbers. These are no one specific, just make numbers, make them a little easier. But let's say somebody makes $100,000 a year and they receive $70,000 in restricted in RSUs. That is an extra $70,000 of income that they're not really accounting for in terms of their withholdings to their employer, that at the end of the year, they see their W-2 and they're like, where did all this money go? Like, I did not see anywhere close to 170 grand worth of money. I only saw 100. And they feel they don't understand that they still have access to the 70 grand. It's typically sitting in another investment account that is housed by the employer, and they're getting hit with that income, but the tax side of things is not really being accounted for unless they're wildly increasing their withholdings. So at the end of the year, we have these clients coming in with these large tax bills, not really understanding of, I didn't really even see this money. Like I see that I made a lot of money, but I didn't really feel it in the moment. So I know that's often one thing where we have to educate clients on, no, well, you're getting credit for it, and it's on you have access to the money. It just didn't come directly from your paycheck. So then that's when we started talking about devising a plan for those RSUs, if it's cashing it out or if it's leaving it in the company stock, which kind of leads me to the second point that you mentioned of just concentration risk. Sometimes you can get all this money in the form of company stock, and our general rule of thumb is we never want more than 5% of your portfolio in a one holding. So, and that's exactly aligned with the point you were mentioning. If you're getting half your salary in company stock, that can quickly get to 10, 15, 20% of your overall portfolio. And then we start devising of, okay, how do we start taking some risk off the table and creating and then allocating those funds, still keeping it in the investing bucket, but moving it to a more well-diversified portfolio across different ETFs or across bonds, and not just being tied to, and not even concentration risks in just the stock portfolio, but also in your life. I mean, if you're already employed, this company already provides for yourself, provides for your family if you have one at that time. Now, on top of that, it accounts for 20% of your portfolio. You're really riding that company. If you have full trust in it and faith, then there's some instances where maybe having a little more could be appropriate. If people are just, no, this is just a paycheck that I get, I'm not passionate, I'm not totally sold on my companies and to kill it. That's not how I feel. I just work there, they pay me well, I get treated well, but I'm pretty indifferent about the performance of my company. Then it's okay. Then they feel a lot more comfortable kind of cashing out completely and just investing it in a more traditional way, or just in a allocation that we would recommend. So I think there's just a lot of moving parts when people get all this all this compensation, and it can create a lot of confusion at the same time.
Yeah, and I'll give you another example of monkey math, right? That's what my kids call it. Yeah. So another example of monkey math is if you give yourself credit and you say, well, I make $100,000 a year and I get 70,000, of the stock. So we talk to the client, we say, wow, you're saving 70,000, dollars a year from this employer stock. And then they say, oh no, well, I pretty consistently, sell out of it and then use it for cash flow. So then there's the opposite end. Sometimes someone's feeling really stressed because they're not cashing out of it or accessing those investments. And sometimes people are double counting it and they're giving themselves credit and saying, I get 70 grand of stock every year. Well, if you run your way through it and sell out of it and use it to pay your bills, then you're not really investing, any of that money. And I would add to your list the ESPP, the employee stock purchase plans. Those are similar to the stock that you receive on behalf of the company through either stock options or RSUs. But the ESPP can be really valuable because most times your employers can allow you to buy the stock at a discount. The most common number we see is probably about 15%, wouldn't you say? Yeah, so you have this opportunity to say, withhold a certain amount from each paycheck. I'm going to buy into the company stock over, say, a 6-month period. After that 6-month window is up, in the fine print, it tells you how the share price is decided, again, typically around a 15% discount. And then the stock lands in your account after that period. And that one can be really valuable where we will sometimes use it as a funding tool, right? Like if you're going to get a 15% discount, or some people would call it a 15% gain on the other side of your money, then maybe it makes sense to flow money through your ESPP, have a consistent schedule to sell out of it, and then to be able to reinvest that money in something else. So in that sense, it ends up being more of a conduit rather than like your end spot of buying that company stock.
Yeah. Yeah. Thank you for bringing that point. Yeah, this is to show listeners out there that there's just so many different types of payment just compensation structure. She's mentioned the ESPP. We're talking about RSUs, talking about stock options. We're talking about bonuses. There's so many different forms of compensation. There's benefits on top of that. So the things that you can't see directly from a dollar amount, that could be maternity leave, that could be paid time off. There's just so many things that create your full package. So it's never just, oh, I'm making X amount of salary. That never tells you the full picture. There truly is so many other factors that go into kind of the full scope of your payment. Just your payment package as a whole, which kind of leads me to my next kind of thing that I'm thinking. This actually came up at a client meeting today that we had, Liz, where we had a client come in and they had just shared that she had gotten a raise. So she got a promotion, she got a raise, and then the first thing her husband says is she didn't negotiate more money though, and he felt like she should have. She's taking on more roles. She's managing people now. Her responsibilities have increased on top of her old job, which nothing has changed in that. It's only been added to it, and he felt that the pay increase was not where it needed or equated to what you would be doing moving forward. Um, I'm guilty of that myself in my career. I have never negotiated a salary in terms of asked for more money. Whatever they gave me, I was always super grateful. Yes, I took it on the spot. I turned down some jobs as well, but I've never tried to push for more money, especially in the early phases of career. Don't know if you have the leverage at that point. If once you start climbing and you truly know your value, I think there's a different level of confidence and a different level of just knowledge of the industry that you're in. Of no, well, I know that I should be around this base amount. So as you get more information, it's obviously easier to have leverage in these conversations. But I'm curious on your end, Liz, what has your experience been with kind of pay increases? Have you personally negotiated a salary increase? I'd love to hear any personal stories on that front.
Yeah, you're putting me on the spot. Um, First of all, thank you for the subtle message that you would like a pay increase. Okay. Yes.
I won't argue. I won't fight it, but I feel very fairly compensated for sure.
Message received. Okay. On the recorded line, nonetheless. If that's not putting me on the spot, I don't know what is. Um, yes, I do have experience negotiating a pay raise. Um, First, I would say, and related to the pay raise, I've done both ends. I've done career switches that result in taking a very significant pay cut, and acknowledging that your skills that you had in the previous role don't translate as well. And so, where you may have been more, maybe not an expert role, but you were more in a leading position in the past, you are now a rookie and you've kind of made your way to the bottom. So I've taken more, I think the math came out to like a 55% pay cut when I joined financial planning. So that was really challenging for sure. And then on the other end, negotiating salary, I think I said to your point was really valid at the beginning when you're joining a company. The best way to show your value is to have hustle and commitment and grit and be willing to step in and help with all kinds of projects. Those skills are very valued throughout your entire career. I just would add that as you go further in your career and you gain a level of expertise and knowledge, you bring more to the table, more than that time and that hustle that can come at the beginning. So what I did in my experience of negotiating a pay raise, first of all, I had to start at the very beginning, which was like getting the date on the calendar, because conveniently, don't worry guys, it wasn't at my role at Curio, and it wasn't at my role at Baypoint. So but I had to make sure that the date was on the calendar to be able to speak with my supervisor or manager, whatever you want to call it, to make sure that we had a chance to talk about my performance throughout the year. So it was awkward enough right from the beginning saying like, hey, I noticed it's been a year. Could we get some time on the calendar? So personally, what I did was I made sure this was a live conversation. We were Zoom colleagues, so I couldn't make it in person, but it was a live conversation. Gave the boss a heads up, said, hey, I would like to have this conversation with you and go over my overall performance and any annual goals you have for me in the year coming up. Is there a date that works best for you? Just so that they could wrap their head around it. Then I was emailed back with the date. So I was sure to let them know. I'm trying to use proper pronouns and everything. I was sure to let them know that when it came to this date, like what I wanted on the agenda. So again, it wasn't like confusing or thrown off, so that the boss could prepare and know that I wanted to talk about salary. And then I basically went to work in deciding what are going to be the best ways to navigate that conversation and show my value. So I started by asking a lot of open-ended questions about what I've been doing for the firm, what I can be doing better, some places that they've, seen me step up and go above and beyond. And then I confirmed my desire to continue working with the firm. And it continued to, really bust my butt to get us to where we wanted to get. And then I put it out there on the table and I said, it feels like now would be an appropriate time to revisit my compensation. And then I stayed quiet, which is one of the hardest things for anyone, but definitely for me to do. So I wasn't sure whether it'd be like who throws out the first number and all of that, but I found that setting the stage, making sure the boss knew that like the power was in their court in terms of this is the meeting, this is you deciding compensation, just so I didn't get a level of defensiveness. And then the boss brought up a number. I thought it was pretty fair, but I wanted a bit, more. So then I said, I really appreciate you coming to the table, having, this amount in mind. When I was thinking through what I feel like would be a reasonable compensation, given what I'm currently doing for the team, this is the number that I came up with. Here are 3 examples. Like I tried to get very specific. Here are 3 examples that I've, brought some additional value beyond the traditional job description. And the person sat there and listened and said, okay, I think that's a valid point. I didn't think through those things. I'd be comfortable meeting you at that number. So I happen to have a success story. Lots of people have stories that go in different directions. But it challenged me on a personal level and on a comfort level of showing respect and excitement for a job while also managing that your worth. So it gets easier every time, making sure you kind of have those annual get-togethers if they're not more frequent. But yeah, that's my little story.
All right. Well, so I will be booking a meeting with you tomorrow morning then. I'll put some time on your calendar. And I'll lay out an agenda. We can have a discussion. No, but I think that's super helpful to hear your experience. Because one, I took a few takeaways from there. First thing was the hardest thing is that first step. So like, and that's anything in life, right? That's in your relationships, if you're trying to lose weight, if you're in your career, the hardest thing is getting that first step going in the right direction. So getting a meeting, there's no conversation without the meeting. So that helped you mentally prepare in terms of gearing up for that conversation. You giving a heads up to the employer, this is what I'm thinking, this is what I kind of want to discuss. So they're not blindsided and just, oh, it's just another person wanting more money. And I think the most important thing, which most people, I think, when they talk about pay raises, they don't factor in, is like, you need to justify the pay increase. Like, people want to make all this money, but they don't know what comes with making a lot more money. And again, we get to work with amazing clients, and our clients that are super successful, they work their freaking butts off. They're working long hours. They're sacrificing time away to their family. It's not just they're making it rain and they have this perfect work-life balance and they work 35 hours a week. That's not the case when we get to these salary ranges that a lot of people anticipate and hope to make in their lives and their careers one day. It's you asked what more you could do. You were talking about how you can improve. You were talking about the things that you brought to the table. And it wasn't truly just, oh, I deserve more money. I mean, that's kind of people's a lot of approaches. Oh, I deserve this. I want more money because of that. But there's no tangible thing of like, what skill set are you bringing? Did you learn another skill that you could do another function of the business? Are you going to take on more responsibility? Those things are required to make more money. I mean, in the end, they're a business. They have to make money. So you need to be worth more than what you cost to the company.
Yes. Touche. And I would say one thing to add to the things to avoid column would be it is not your supervisor, manager, boss's job to provide for your own financial life and goals. And what I mean by that is I've heard people enter those conversations and saying, like, "Oh, well, I'm getting married." Or I think I'm trying to save for a house, right? I mean, believe it or not, I've both participated, heard these conversations as a supervisor, and then heard other people work through their negotiation. So it can be very tempting because that's almost taking the pressure off of you, and it's saying, hey, I wouldn't be doing this, but I'm buying a house. Hey, I wouldn't be doing this, but I'm getting married. But there's nothing empowering about that. So yeah, you want to keep the focus on what you've been doing. So that would be the pitfall to avoid. And then the other piece that I would say is to be mindful that it is really tricky to only know where you stand in the overall performance of a company once a year. So a lot of times, different bosses aren't necessarily looking at that on a quarterly basis or on an ongoing basis. But the longer that timeline, the more pressure going into that meeting of like, is this the one time a year I hear that they've actually been unhappy about me doing something for the last 11 months? So I also tried to engage in little opportunities, even if they were less formalized, to speak with my supervisor and say, hey, want to know, is there anything that you're seeing, you're observing that you want me to be doing differently around here? And then that made me feel more comfortable going into that annual review rather than it be like a big blindfold. And then you get there and you don't know whether they're going to be like, raise, we think you've been doing terrible. So that would be my final
Yeah.
2 cents about it.
No, that's definitely helpful coloring to kind of top off this episode. So yeah, guys, thank you for coming in and listening. Hopefully you got some value there. And we were just trying to give some insight of kind of the further discussions and things that we topics and conversations we're involved in that aren't just this is how much I made, this is what my accounts are. We try to go deep and help people in any way. And getting more money, obviously earning more will help you save more, which will help you invest more for your future. So they're all kind of intertwined together as we try to play whatever role limited we can. We're not career consultants here, but we try to add any from our personal experience or anything to kind of help add any value to the clients. And listeners, I'll let you know how if Liz's tips work. I'll try them on and see if there's any validity to them. But with that, guys, thank you for tuning in to our episode. Please find us anywhere where you hear and listen to your podcast. We're on YouTube, LinkedIn. You can find us on our website. So please subscribe. Please share with a friend if they're in the middle of a job hunt, or if they're in this phase of life. Please share this, and hopefully they can get something out of it. So thank you guys for listening.
Thank you for joining us. And for the record, I feel bamboozled. So, bye.
See you guys.